Well, welcome everybody. My name is Joe Cap. I am one of the chairs of National Entrepreneurship Week, along with Amber Ravenscroft. And I want to welcome everybody here for joining us today for this exciting topic. It's been National Entrepreneurship Week was restarted by Amber and myself in 2016 to pay homage to all of the entrepreneurs who've come before us, as well as put together programming and events during this entire week for entrepreneurs all around the country. And so this is one of those events, along with a number of other events that Amber will go ahead and talk about a little bit later towards the end of the programming today. So I want to thank you all for taking the time today to join us. And I'm going to go ahead and introduce David Ponraj. David is an amazing entrepreneur. He's done a lot of incredible things. I got his bio here, but I happen to know him personally as a really good friend of mine. He is the CEO of Economic Impact Catalyst, but he got his career started working on data and understanding data, and he combined that with his love for entrepreneurship and launched EIC in order to be able to go ahead and create a platform to help entrepreneurs all across the country. It's been a pleasure and an honor to be able to work with David over the course of the years, and I'm super excited to be welcoming you here today, David. Welcome. Thanks for joining us.
Yeah, thank you, Joe. Looking forward to an exciting conversation today.
So I'm not sure who is up next. Is that Tarsha?
Yes.
Hi, everyone. Thank you, Joe.
Welcome.
Yeah.
Welcome. So please take a moment to just share a little bit more about your own background.
Sure. My name is Tarsha Hearns. I am the Senior Director of Ecosystems here at the DEC Network, and DEC stands for Dallas Entrepreneur Center. And I'm very excited to share the work that David and I and his team worked on for about almost a year, just to close the access to capital gap in an underserved community here in the Dallas-Fort Worth area.
Yeah, and Joe, if you're okay, I'll jump in and
yeah, please do.
Yeah, and so I'll just start with like a brief introduction of the program and why we thought it was very timely to talk about it today. But then also would love for Tarsha to kind of walk us through what the process for bringing an Entrepreneur of Color Fund or access to capital for diverse entrepreneurs. What does that take? It all started about 2 years ago when Tarsha reached out about a program that was being funded by JP Morgan Chase to help understand the capital access gap in Dallas County, in Southern Dallas, and to understand how entrepreneurs are going and where are they finding capital. So we actually did a study working with Tarsha's team, with the business support organizations, and with the capital network. So the local CDFIs, for those of you who don't know what a CDFI is, it's basically a nonprofit lender that is funded through both local and through the federal government to be able to provide capital to underrepresented communities. And we worked with several banks, Bank of America, Charles Schwab, PNC, et cetera, to understand the gaps in capital for specifically Black and Brown founders. Where did they go to get the capital? And we had some really interesting findings that we'll go through as part of this. But I also wanted to make it conversational to make sure that we are bringing in the people that are on the call today. So I'll have my team kind of moderate some of the questions in the chat that we can bring. But I wanted to first kind of pause and turn it over to Tarsha. Tarsha, if you wanted to kind of just talk through the idea behind why this was brought up as an initiative, why it was funded, and why this work is important now.
Yeah, absolutely. I don't think it's new that there's communities across the country that are not getting capital in terms of starting businesses and growing their businesses. Here in the Dallas area back in 2019, before the pandemic, an initial study was done. It was called the Next Street Study. And that study, while it was a great study, it really only focused on one particular neighborhood, which we call South Dallas, that has 2 zip codes. And South Dallas is one of the lowest income communities within the whole Dallas area. And it really brought up some interesting information in terms of the amount of capital was getting into the southern sector of Dallas. It also brought to light that there wasn't a ecosystem, that a big metropolitan city like Dallas did not have a coordinated ecosystem that would work together to not just an ecosystem for the southern sector or underrepresented communities, but just in general. And so through that study, it came back with several recommendations, and the obvious one was we need to form an ecosystem. And we need to, and the second recommendation that our newly formed ecosystem back then started was to come up with a program, a program to get grants into those communities. And shortly after the pandemic came, and of course, those same communities struggled to get capital. So that initiative kind of pivoted because of the pandemic. And so 4 or 5 years later, here I come to the deck. Had always been a part of the ecosystem, so I was very familiar with that 2019 study. But as I looked at what we were trying to do is systems change, right? The programs that were implemented under that previous study needed to grow and expand and focus on more zip codes in the southern sector of Dallas and reach more businesses. So my first day on the job, actually, here at the deck, my boss gave me this project. He said, "This is your big project." And I'm like, "Okay, what is it?" And then my predecessor had already reached out to David about, coming on board. I needed time, and I'll be honest, David, I asked a lot of people, tell me about EIC. Who is David Ponraj? Nothing but great feedback. I mean, they were like, you got to work with him. He's, the best in the business. So yeah, you won't go wrong by choosing. And they were absolutely right. So I'm very grateful and thankful for this partnership. So to kind of continue to answer that question is, we were looking at how do we take what we were doing pre-pandemic and through the pandemic to the next level? How do we move past these small grants that we were given? We were given like $2,000 grants, which is fine, but that's really not going to do a lot to scale or sustain a small business. So we knew that we needed to come up with some solutions around how do we get capital into an area that we call a financial desert. Not only is that area a financial desert, it's a food desert. I mean, there's not even a grocery store nearby. So we embarked on this study with EIC. We did focus groups. We wanted to hear from the ecosystem. So we did focus groups on entrepreneurs with entrepreneur support organizations. We surveyed 453 entrepreneurs in that target region. We also did focus groups with our community development financial institutions, which are CDFIs. And David helped us come up with a few recommendations on, just to move the needle a little bit to close that gap.
Yeah, and we're going to jump into kind of, what we found. So I'll kind of tee it up, Tarsha, with some of our findings, and, would love for you to add color to it. Initially, when we got in there, the typical thought that everybody has is, if you run a survey asking people, especially small business owners, what do you want? They're all going to say, of course, we want capital. The first big finding we found was that they did not want capital. I mean, they did not want our capital. They wanted capital, but they'd been so disenfranchised by the constant rejection that they were going to online lenders and they were going to other predatory sources, because business owners are very enterprising. They're going to find a way to get to do their work. The sad part of it was they had excluded themselves from the capital access network in Dallas County, because every time they went, they were rejected. And so we asked them, so why are you not looking for capital? They said, because when we showed up, we were immediately told that we didn't qualify, or we were not even told why we won't qualify. We were simply said no. And in a lot of cases, people didn't know how to apply. And so the trust in the network was broken, that if you said you had capital, it was not good enough to bring people back to the table. And Tarsha, I'd love for you to kind of drill down that, we did a lot of even in-person interviews with BSOs that validated those findings, right? Around the fact that I think there was somebody talking about a business owner that constantly kept getting rejected, but yet they were 5, 6, 10 years into their business and kept growing. And those kinds of narratives really broke the trust.
It did. And, if you have ever worked with communities of color, trust is a big thing, right? You have to be a trusted source, a trusted guided source for them to really believe. And it's odd that the survey responses came back is that they would trust an online lender, a person that they're not even dealing with a live person in most cases. It's just technology. So it says a lot that they're willing to go online, not even have human interaction, get much higher interest rates because of the fear of being declined. In our study, I believe it was about 51%. Let me make sure I have the right number here. About 51% of those that said they wanted to get a loan, but didn't even apply because they thought they was going to be declined. So that was like one of the big things that we said, well, we can't launch an access to capital program for this community if they don't trust us, because we're creatures of habit. So all they're going to do is like, yeah, here you go again, another lending product. I don't trust you. I'm going to go online. So we didn't want to fall into that same cycle. So one of the things we had to do is address that. So we had to drill down a little bit deeper. And what we found was, who are the entrepreneurs going to first? They're not going to their bank first, because they're very intimidated by financial institutions. Most of them weren't even aware of CDFIs. And so who are they going to? They're going to their church. They're going to other business support organizations. They're going to their chambers. And so through our research and conversations with these groups, because these are people these are organizations that's part of the ecosystem. So these small businesses, the disenfranchised small businesses, are going to sources that they feel like they trusted, chambers, churches, business support organizations, and saying, hey, I need money. Who can you send me to? Or how can you help me? And what we found was those BSOs were not even educated enough on capital access. So first, you go to somebody that you trust, but they're misinformed and not knowledgeable about it. Then that entrepreneur is going to be like so discouraged that they just go straight online. So there's a lot of layers to this, and we're not trying to solve every problem, right? So one of the big areas to focus on is educating our business support organizations on capital access, because we don't want to have this great program and product, and we rely on our ecosystem partners, but we want our ecosystem partners to be well educated and knowledgeable, so that when someone comes to them, they can say, here are the options. Here's what a bank looks for, a CDFI, or this initiative. This is what they're looking for. Let me help you get ready for it before I send you over to them. So that's the approach that we're taking as it relates to those individuals that wanted to apply for a loan, but didn't because they fear they would be declined.
Yeah. The other interesting fact that we found was that the institution that was primarily responsible for solving this problem was, in fact, the biggest problem. And so let me kind of break it down. And Tarsha, I'd love for you after this to kind of add color to this. But we found that CDFIs rejected people of color at a higher rate than even credit unions. And this was like a shock to us. Interestingly enough, it wasn't a shock to the CDFIs. They said, yep, we know this. We see this come through our desk every day. We really want to fund, but our hands are tied. We can't fund businesses in our own communities that we're passionate about. And so there was a dual problem. There was the problem of trust, but even the institutions that were there to fund people of color were not able to fund people of color because of archaic and rules that were prejudiced against the business owners in their communities. So things like a credit score. And this is something that I'm really passionate about, because we tell our business owners, when you go to start a business, nobody's standing there with a pot of money to give you, that you have to find ways to fund your ideas, mortgage your home or take out credit cards or work a second job. And business owners do that. And a lot of times that affects their credit score, even though they've got good businesses with good cash flow. So credit scores are held against business owners. Their debt to income ratio is held against business owners. In some cases, business owners just don't have good financial practices. They don't have the financial statements ready. All of these were working against business owners. And the institutions that were primarily set up to support them were the ones failing them the most. So I want to talk about that, because that's a good segue to get into talking about why we were able to use those very institutions to then come up with a way to actually solve this problem.
Yeah. And shockingly enough, it was a shock to me. Even though it wasn't a shock to the CDFIs, it was shock to me. It was a shock to some of the business support organizations, and it was a shock to the financial institutions, the banks that fund these CDFIs. So some of you on the call might be with a CDFI or not, but for those of you who don't understand how that works, a CDFI actually receive funding, whether it's through the government or banks through their CRA, Community Reinvestment Act initiatives. So essentially you have a financial institution, let's say a Bank of America, Wells Fargo, a Chase, who part of their CRA initiative is to invest in programs in underrepresented communities and provide loan investments to CDFI so that the CDFI is taking the risk of issuing the loan versus the bank taking that risk of issuing the loan to someone who might be credit challenged or lack the collateral or enough collateral needed. But through our survey, now there are a total of 9 CDFIs in the Dallas-Fort Worth area. 5 of them are nonprofit. So we focused on the nonprofit lenders. And oddly enough, 53% of the applicants or the participants in our survey, 53% of them were turned down by a nonprofit lender. That was shocking to me and the financial institutions, because it's like, well, wait a minute. If you are given loan investment dollars to invest in these underserved communities, why are you still turning them down? And we love CDFIs, but they're in between a rock and a hard place. It's because yes, they are mission driven and they want to put those dollars there, but they also have to look good to their investors, which are the banks, and not have high loan default rates. So they tend to the applicants, if their number one reason for being declined is insufficient credit score or insufficient collateral or down payment, then the CDFI is not wanting to take the risk. Now, we talked one-on-one with each one of our CDFI partners, and every last one of them was on board with trying to come up with a solution because they want to do it. They want to put capital into the hands of these entrepreneurs, but was just, in a rock and a hard place. I think I saw a hand. Are we taking questions now or?
Yeah, we can totally make this a conversation. And I have some questions, but let's see what Amber.
It was an accident. It was an accident. I am
Oh,
so
okay.
No problem.
No problem.
All right. No problem. We'll keep rolling then. So we'll then segue to the next phase of this. So the CDFIs want to support and they want to help, right? They see the problem. We're also seeing some very creative ways around the country that CDFIs are able to stand up these funds. And then JP Morgan Chase has funded through $100 million fund, an Entrepreneur of Color fund in several markets. So we decided that Dallas should get its own Entrepreneur of Color fund, right? So we started early inroads into kind of a town hall where we shared our plans. We had over 100, people in the room. The community was really bought in. I'd love for you to kind of share some of those, early days of the design of the program, because clearly that problem exists. People validated that they see the problem and they wanted to help come up with a solution. And if you could talk about our early design of where we thought we should go, right? Because a lot of this is iterative. You're trying to figure out the path of least resistance to create an impact.
Yeah, so I feel like I'm talking to family, so I'm going to be very, transparent and upfront, because I feel like most of you on this call have probably, if you're on this call, you're an ecosystem builder, you're a part of some type of entrepreneurial ecosystem. And while everyone was like on board and loved the idea and the recommendations to bring an Entrepreneur of Color fund to Dallas, as we started talking to our CDFI partners and other nonprofit lenders, we did get a little bit of hesitation. Well, now our organization, we're not a lender. We're not a CDFI. We are an ecosystem convener, an ecosystem connector. We lead entrepreneurial ecosystem initiatives. And so some of the hesitation we got was, well, are y'all trying to be a lender now? It was like, we're competing with our partners. And I started to sense that very, very early on, and just started to have real honest conversations. And I said, we all said, it was myself, we formed this task force. Members of the task force started having conversations with some of our nonprofit lenders in the area. And we just asked, like, okay, well, what if we don't do an Entrepreneur of Color fund? What do we do? Because we can't do nothing. We can't keep doing the same thing, thinking we're going to get the same results. We all know that's insanity. So what could we do to better support the entrepreneurs in this area, but also help get capital? And just about every one of them said, well, we want to get the capital, but unless we get some type of guarantee, unless we get some loan investment dollars for that specific area, and we can be more flexible with our underwriting, we can create programs. But until we have that, and when I say we, I'm talking about the CDFIs, until they have that, it's kind of out of their hands. So that's when David was like, have you heard of SSBCI? And I was like, no, tell me more. And so I'll let you talk more about so in other words, we was gonna do this Entrepreneur of Color fund. There's like 6 or 7 around the country. These are loans. collaborative loan products. And we kind of just pivoted because we were like, we don't want to compete. We don't want to get into the same cycle. And if these collectively, if these 5 to 9 CDFIs want to put funding in the area, but they have their own roadblocks, what barrier can we remove for the CDFI who already has the money, right? That means we don't have to go fundraising because they already got it for the loan. And so David introduces SSBCI into the equation, and that just took us all to a whole nother level.
Yeah, and I think the basis for that was that we found that there's no lack of capital nationwide.
That's right.
Right? There is no lack of capital. The CDFIs are not really looking, and even the Entrepreneur of Color Fund that JP Morgan Chase launched for 100 million, that created capacity at the CDFIs. So we asked ourselves, if capital is not the problem, where can we make the biggest impact with this program? And so we said, creating the infrastructure that creates trust in the network is a must. Helping BSOs provide targeted support for getting financial readiness is another really important piece. And we looked at the SSBCI, now every state knows about it, but a year and a half ago, SSBCI was still relatively new. And so my thinking was, could we use SSBCI as a way to work on things like loan guarantees or loan loss reserves, the things that unlock the capital? The capital exists. How do you unlock this capital? How do you make our CDFIs and lenders be willing to take more risks? How can we help our business owners be ready? How can we create programs that the BSOs can participate in? So, and Tarsha, you should talk about, if you're open to it, your Washington, D.C. Walk into a bar conversation, if you're open for it.
Not a bar, a restaurant.
Sorry, restaurant. Sorry, yeah.
That was afterwards. That was
Yes.
afterwards, way afterwards, but.
Yes, sorry, you walked into a restaurant, but I wanted you to tell the story because a lot of times, you need that little bit of luck. You need some of those serendipitous connections, right? You put it out there, you're like, I'm going to do this. But then you need the stars to align. And I think that's a fantastic story that actually came to life, but yeah, right? So basically there's two pieces where, Tarsha, you're working really hard to figure it out. And then we've got SSBCI that we're trying to match and connect. And so I'd love for you to kind of talk a little bit about what was the outcome with the Dallas Collaborative for Capital Access, what that new fund looks like. But maybe start with like the origin story, because I think that's forever going to live. How you found a funder to actually take this on to create capacity at the BSOs, which was a critical component.
Yes. So as David said, we're looking at SSBCI funding. Texas does not provide in their program any funding for technical assistance. So, which, is disappointing, but you always figure out a way. When you're a mission-driven person and organization, you go through the back door, the side door, you might even go down the chimney. And so you just find a way, right? And you find a way to make it happen and to solve a problem. Thankful for me, I was just blessed to be in the right place at the right time. And so I am on the board for the Association of Women's Business Centers. And every single year we go to DC to advocate for the 140 women's business centers across the country, advocating to get more funding, more resources for women entrepreneurs. In March of 2023, we were fortunate enough to be invited to the White House by President Biden to hear his commitment and initiatives for women entrepreneurs. Well, this was going to be my first time going to the White House. I was I just had the jitters. I couldn't sleep. It was like a kid first day of school kind of jitters, like, oh, this is my first day of school. I mean, I just could not sleep. all kinds of stuff was just going through my head. So I was actually staying with a cousin that lives in Maryland. So I got up extra early, decided to catch the train into DC a little early just to kind of calm my nerves. So I decided to go eat breakfast at the Willard Hotel, which is in walking distance, a few steps from the White House. The host walks me upstairs, and as she was walking me to my seat, I heard a voice in the background, and I was like, I recognize that voice. I turned around, and there was T.D. Jakes. He is a well-known pastor here in the Dallas-Fort Worth area, but he's known internationally, and he is all about entrepreneurship. So when I heard his voice, I immediately introduced myself and let him know I was from Dallas and told him about the initiatives that we were working on to bring capital. Now, mind you, his church is located in the community in which our center is in and the community in which we are wanting to serve with this program. So if this is not aligned and supposed to happen, it was just meant to be. So exchanged information, and long story short, it did take a few months to get connected and have his people come out, sit with us, learn about what we're doing. And the beginning of this year, last month, we were blessed with a $250,000 grant. Not to fund the lending side, but on the programmatic side for technical assistance. So we're using that funding to form the Dallas Collaborative for Capital Access, which is basically an ecosystem of CDFIs, financial institutions, business support organizations, philanthropists, entrepreneurs who really want to close the capital access gap in the southern sector of Dallas, as well as across the DFW area as it relates to women and minority founders. And so with that funding inside of our entrepreneur center, so we have a 20,000 square foot entrepreneur center in the largest minority populated area of the city. And so within that, we're like, we're not going to wait for a bank to come to that area. We're not going to wait until some miracle happens, right? We're just going to make it happen. So we're standing up a capital access resource center in the underserved community. So we're going to bring the resources to the community versus having them going out trying to figure out where. We'll use that funding to support the training. So as I mentioned before, part of this study helped us realize that our BSOs were uneducated about capital access. So we're going to use funding to create a training program. We're working with a national organization as well as some local partners to develop that training program for the BSOs so that they know how to pretty much pre-qualify an entrepreneur. We're working with David's team to come up with a digital navigation system so that the entrepreneurs can go to get pre-qualified. If they're not ready, they'll get forwarded to one of our ecosystem partners who have been trained on capital access, and they will teach, the entrepreneur, handhold them, build those relationships, form the trusted relationship, and help them get ready, because they're going to already be trained on what the CDFI is looking for, what the financial institution is looking for. So they're not even going to start that process unless they are really, really sure this applicant could get funded. We're going to leverage the SSBCI funding that each of the CDFIs receive so that the loan can be guaranteed, or they have loan loss reserve to help the CDFI get to yes quicker and reduce that number. Previously, I said in our survey, 53% of the respondents were declined by. a nonprofit lender. So we want to reduce that, right, number, and we're hoping that the SSBCI funding, the contributions from TD Jakes Foundation, as well as we did receive funding through Bank of America as well. So we're hoping all that funding will help us solve some problems in 3 different areas, right? It is the CDFI, removing some of the barriers for the CDFI so that they aren't taking on that full risk of issuing loans to the community. Removing the barrier where the business support organization didn't have enough knowledge, understanding, or education around capital access to help an entrepreneur, and then the entrepreneur themselves. Insufficient credit score and insufficient collateral is always the challenge. So we want to make sure that we address that with technical assistance as well.
Yeah. I'm going to just quickly recap our story to this point for those that might have joined late. I also want to encourage, if you have any questions that is specific to your community, please post it in the chat and we will answer those questions. But basically, as a recap, for those of you that joined late, we found there were 2 major problems. There was trust in the network. Entrepreneurs felt disenfranchised. And 2, the CDFIs and people that were the lenders were struggling to find ways to fund business owners because of their own archaic practices. And through SSBCI, which is a fantastic program, we actually support in various states, and the money, which is unique in Texas, because Texas actually did not get any technical assistance funding from the federal government. In other states, we actually have technical assistance funding in parallel to capital funding. So you can actually get more socially and economically disadvantaged enterprises or businesses and very small businesses to qualify for capital. In Dallas County, through this initiative, the Dallas Collaborative for Capital Access, Tarsha and her team have created this Entrepreneur of Color Credit Enhancement Fund, which is funded by Bank of America, TD Jakes Foundation, etc., to do the things that Tarsha just mentioned, which is being able to help CDFIs get pre-qualified business owners where there should be very little objection. And the best part of it is that we've also vetted and brought in a pool of CDFIs that have raised their hand and said they want to help solve this problem. So that there is a group of CDFIs being able to access SSBCI capital, but then work with Tarsha's team on getting the pre-qualified business owners, identifying BSOs that specifically have qualities or qualifications to support businesses that might have financial, legal, or accounting gaps, which are the primary ways in which they are disqualified from getting capital, identifying them and standing them up, and then helping entrepreneurs understand what it is like to go through the journey, creating more transparency in the process, helping them navigate the capital access network by having a digital platform where they come in once and then they're guided through the process, so they're not having to get bounced around and get tossed from one lender to a BSO, etc. Creating a seamless process for them allows us to now actually serve more businesses. And like Tarsha said, then to go back and measure how many businesses have actually been funded that have raised their hand and said they want capital, capture those stories and take back to the community so we can bring those disenfranchised business owners back into this network, right? That's that story we want to tell, because people are starting businesses in Southern Dallas as we speak. So it's not the problem about wanting businesses, it's about whether the business owners trust the process. And so through this collaborative, with this new space, also a physical space that's opened up with Tarsha's team, I think it's just a fantastic solution. So Tarsha, did I miss anything in kind of the recap of kind of where we are today?
No, you did it perfectly. Yeah, I do want to just let people know we haven't launched our program yet. So like I mentioned before, we phase 1 was really the research study, feasibility study, focus groups and all that. And then once we pivoted, And then honestly, we were building our facility. So we took about a 2-month pause to finish that and then came back and focused back on it. But we're in phase 2, which is now waiting for the state of Texas to approve those CDFIs applications. And so while we're waiting for that approval, we are moving forward with the business support training. And so our hope is once we start getting the business support organizations trained and start funneling the entrepreneurs through that training, we want to be able to see the success rate of more loans, right? So we will have tracking mechanisms put in place so that we can track some important KPIs, like, because we want to see those numbers go down in terms of the number of declines.
Yeah, and I'm putting in the chat also the link to the SSBCI program. Every state got funded. So whatever state you've logged in from, that program exists. And you all the states got the funding. The TAPs, not every state applied for. So states are kind of being creative on how they ensure that they meet what we call the SETI, the social and economically disadvantaged individual, or the VSB, which is a very small business designations requirements as part of the program. But that's something that we can help guide anybody that wants to know. But I put the link directly to the Treasury program as well. So Tarsha, in terms of like talking about next steps here, where do you see, 2-3 years from now? And I know I'm, asking you to think big, like, where do you see this program going in terms of, once we've kind of brought all of this online?
Yeah. So right now it is definitely a place-based initiative where, we have identified a certain region that is really suffering. And but we do see once this model becomes successful and we have numbers to share, I know that our collaborative, we're already thinking 3, 4, 5 years down the line of what will be the next community that we focus on, right? That we build those trusted relationships. So I definitely see this expanding. There are other communities around the country that are doing similar things. I've had the opportunity to just talk to ecosystem builders across the country, and then they would connect me to this organization that's doing something similar, or that organization. So I also see that the more and more, great minds think alike. And so the more and more these types of programs and initiatives exist, I see more long-term that there's like a national ecosystem of capital access ecosystems that come together to really share what they've learned, some best practices, so that there is a model to follow and be able to use. So, but for our program, we definitely see this expanding to other underrepresented or underserved areas within our Metroplex and possibly across the state.
Yeah. And one thing that, Tarsha, you had talked about that digital platform. Some of the best practices that we are implementing nationwide is this idea of the common intake app. I know Kansas City is also doing the common intake app. And, the idea is that we want to design processes with the small business owner in the center of it. How do we make sure that the small business owner is not constantly being referred from one BSO to another BSO to another lender? That breaks trust. So once they have been identified as somebody that needs capital, how can they be guided through the process through a navigator or through a trusted network provider that can take them to the right place? Having a readiness checklist at the BSO level. So if you come to a BSO, the BSO knows what are the key factors that a lender is going to be looking for, so the application is not rejected because the BSO was not aware of the lending practices. So creating more training like you are doing in the BSO community and giving them things like checklists that are verified by the lenders. and then creating a strong referral process with the lenders themselves, being able to refer businesses directly to the lender once they have completed the checklist. There's one question here along those lines around, as businesses are prepared through the support organizations, are you seeing success rates increase? And we're just launching, but that's kind of the idea, right?
Yeah, so yeah, we're in the development stages, so we actually haven't put anyone through. So ask me that question a year from now,
Yeah.
and we will have some results for you. But ideally, that's the goal, right? We've established, and so the interesting thing about trying to solve this problem is, and the approach that we're taking is, we're doing this as an ecosystem, because I think that when we looked at the 2019 study, and even David did some research and found other organizations doing this, very few of them took an ecosystem approach. Very few of them had the right people at the table. Because even in the 2019 study, it was only the entrepreneur and the CDFIs. And so, well, what about the business support organizations? What about the banks? What about this? What about that? So it was so many perspectives left out of the equation. And so, the individuals and organizations that are part of the ecosystem and the ecosystem builders who are on the ground, who are out in the field, they know what their community needs. And so we are working to cut together to come up with what those KPIs are. And that's more important to our community and to our funders. So we definitely hope to see as they funnel through our training program and those one-on-ones with the business support organizations, that we see higher success rates. And not only, and there's going to be post TA, right? So we don't want to just throw them out there and give them this loan. We want to keep them engaged, and that's why we established the Capital Access Resource Area within our Entrepreneur Center. So now that they get this loan, they can come back to our center and still get the education, the one-on-one mentorship, the additional resources that they might need to help them through that process, because this isn't a one and done type of solution. We want to keep that entrepreneur and continue to recycle that entrepreneur through our ecosystem and get them in touch with all the resources that can support them.
Yeah. And as we measure this, we'll have more lessons learned around what are declines rate continuing, and we'll also measure and be able to tell the stories of these riskier loans. What is the impact to the community? Because our bet is that this is actually going to help drive the same economic impact the others were: job creation, helping improve quality of life, helping drive dollars back into the community. And I think that's where we can start seeing change at a national scale, when people realize that the current ways of how they determine qualification is broken, that there needs to be a new process in what we called alternate access to capital. I think that's when we can really start seeing what alternate access to capital can look like, and we can even continue to drive innovation in the space. So, Tarsha, can you give us just some timeline for what's coming up next as a way to kind of wrap up this discussion?
Yes, so we are like literally in the midst of we're just really waiting for those CDFIs to get approved by the state. So as soon as that happens, we hope within weeks, then we are going to start standing up the digital navigation system. Our hope is to have that completed by the end of this month, with our CDFIs on board, by the mid-March, have our BSOs, business support organizations, trained and onboarded into the digital navigation platform. And then our goal is in April. April is Financial Literacy Month, is to kick off some type of convening to introduce the Dallas Collaborative for Capital Access to our ecosystem and to the general public, to get them engaged in the program and the resources. So I would say by end of April, early May, we will be in full swing.
Perfect. And if people want to learn about the program and follow along, Tarsha, what's the best way for them to do that?
Yes, I would just say follow us on our LinkedIn. I can put that in the chat. We'll start posting some updates in there. But you can find us. It's the DEC network on LinkedIn. Feel free to email me if you want to, or you could go to our website as well and get on our email list, just to get, follow along of what we're doing. But the best place is going to be LinkedIn, because we'll start posting those announcements and the different things that we're doing.
Yeah. Well, what a great story. I mean, a lot of this, Tarsha, I would say, I've been, while also helping, also observing, a lot of it takes a lot of grit and determination on part of a leader to actually work through hurdles, right? Just because you have an idea that can solve people's problem doesn't mean people want to collaborate or want to, right? Like a lot of
I got
people.
some stories to tell about that. We could talk about that offline, y'all. But
yes, that's another lunch meeting in a restaurant.
yeah,
But
no, that's the bar. That's the
that's
meeting
the
in the
bar.
bar.
Yes, that's the bar conversation, right?
That's
Because
the bar conversation.
yeah, there are going to be a lot of hurdles.
Yes.
But I love the grit and the perseverance, and how I think we always agreed that this was the long game, that this is going to be a long haul. And then people start coming out to help you, right? Like the TD Gates
Yes.
Foundation, Bank of America. And once you start building momentum, I know Wood Forest Bank or JP Morgan Chase or PNC, they're all in the sidelines waiting to see what happens.
Yes, they are. But I was an entrepreneur for 20 years, had my own business. So every single thing that these entrepreneurs I'm helping, I've already been through. I've been declined. I've been afraid to get capital for my business. And so I've been in their shoes. So for me, this is purpose work. So it's easy for me. Yes, it's not that easy, because we're still humans and we have humans that we have to deal with.
Yeah.
And we have to constantly, help the people who are going to help the entrepreneurs. We have to build trust and relationships with them. So I'm just grateful that I have been given this project, and this is something that I'm very passionate about. And I think if anyone is on this call and they're trying to solve a problem that they're passionate about, you're going to have the grit, you're going to have the determination.
Yeah. Well said. And entrepreneurs change the world. Entrepreneurs solve the big problems, just like the case here. So thank you so much for your time. I want to turn it over to Amber, because this is actually part of a bigger week-long program that Amber and her team have put together. We're sponsors, big fans, love the work that they're doing. And so we were thrilled when we had the opportunity to actually make this part of that showcase. Amber, I'll turn it over to you.
Yeah, absolutely. And thank you, David and Tarsha. That was such an impactful and meaningful conversation. And I think everyone, including myself, learned a lot from that and how we can support diverse founders. So appreciate that conversation so much. As David mentioned, this is a part of National Entrepreneurship Week, which is happening now through Saturday. It runs Saturday to Saturday, the third week of February annually. We have a jam-packed lineup of events happening throughout the week, including over the next couple of days, federal agency office hours, where you can register and hop on. They'll talk about their resources, current grants, contracts, opportunities for entrepreneurs, and you have unprecedented access to ask them direct questions. So I will drop the link to that. Those will be taking place tomorrow and Thursday. And then on Friday, we'll wrap things up with the U.S. Small Business Administration for SBA Day, where it'll kick off with a contracting and federal procurement conversation, followed by a series of client journeys from SBA-funded entities like SCORE and SBDC, and about how they've experienced and worked with those resources to start their business. So I will drop those links in the chat, and thank again everyone for participating in this event and for Economic Impact Catalyst, all of your support and work. You can always drop resources in your own events in our portal that is powered by Startup Space from EIC. It's a great resource to check out. So hopefully everyone will do that, and we look forward to seeing you on future National Entrepreneurship Week events. Thank you all.
Thank you, Amber. Thank you, Tarsha. Thank you, everyone.
Bye. Take care.
Bye.